And welcome out to Tackle Trading's Halftime Report, a daily market show where we break down all the news, the action, the information. Here as coaches at Tackle Trading right on our YouTube channel and try to give you guys some insight and some analysis that you can take throughout your day as a trader out there. Welcome, welcome, welcome. It is Friday in a week where there's been some light news. I mean, some interesting stuff back and forth through the week, but really, this is kind of a precursor to the next several weeks, which are going to be hot and heavy with earnings season, much more information coming down the pipeline. We're going to digest it all. We're going to analyze everything that's happening here today through the week and try to peek a little bit ahead to what's coming down the pipeline over the next couple of weeks as well. Interesting information out of Gilead. They had more results out of their test on remdesivir and its effectiveness in treating COVID patients. We're going to take a look at that. More stuff with COVID-19 actually around the world, data that's coming out that we need to kind of break down, at least get you guys the information on. Individual company news out of Carnival Cruise, Disney, United Airlines, and more here. We've got a full panel. We've got Frank, as always. Frank, your Friday. Frank Day, fun day, whatever we're calling this these days. Frank, how you doing, sir?
Doing good. Missed the team last week. Fridays aren't the same when I'm not hanging out with you guys and with the team here. But it was an interesting 4th of July, and I'm glad to be back.
Yeah, you took a little camp trip over the weekend.
Did a little camping. I'm a rough camper. I'm not the type of guy who has puts up a trailer and has a camping trailer and things like that, like Maddie. I have an old Army tent and I sleep on the ground, and I'm getting way too old to sleep on the ground, by the way. It hurts.
Was that shots fired at the luxury? Like, that shots fired. I'm just sitting here just waiting, just listening to Frankie welcome in. He's like, I'm going hard at Matt today.
Listen, that's not camping in my world. In my world,
I liked it. I liked
if you have a roof over your head, it's wrong.
I'll make sure to inform my wife about what you just said.
Yeah, something tells me she will side with you and not me.
No. When my wife has an opinion, I side with her. That's how it works, Frankie.
Yes, well, that is how it should work.
Listen, tent campers.
Even Adam's like, yeah, you're calling Matt soft on that one.
It is soft to take a trailer. There's no question about it. Tent campers have been throwing shots for a long time. By the way, Frank, the backpackers would throw shots at you. Like, you need a tent, really? I mean, you need to have that cooler and all that stuff that you just brought in your car. So there's definitely a divide here amongst people that do like the outdoors. But I'm with you, Frankie. Throw a tent down, get out there under the stars, have some fun. Emery County, Utah is wonderful in the summer.
It's a great place to camp. Absolutely. It good fishing and lots of land to hang out.
Did you go up Huntington Canyon?
I went to all of the above.
You checked it all out.
Yeah. I went full gangster. So it was fun.
People might not know this about camping in good old Emery County, but it's some of the most beautiful camping out there. And if you're a rock climber, they have some world-renowned rock climbing areas down in Emery County, Utah.
Yeah, it really is a beautiful place. So it was a lot of fun. It was definitely different than my normal Fridays, though. That's for sure. More work. A lot more fun to hang out, talk trading.
It's a lot easier, isn't it? Sitting in the comfort of your office, no doubt about it. We've also got Mark here and Matt here, as always. We're going to break down the markets. Let's start right here with the broad markets. Maddie, what are you reading in the price action first? We'll get to the news here second.
Yeah, a little bit of a continuation of kind of the information we've seen all week. It's a vastly different week than what we saw last week, where it was the S&P was up 4.7%, the NASDAQ up 5.5%. Breaking out of those all-time highs, and this week was a little bit of consolidation. Multiple days, the S&P really kind of tested that breakout channel, was resilient in its effort to hold those support channels. You do have to update your intraday support channels earlier on in the week. You were really talking about this 3130 level as that support level. Now you have multiple data points down around the 3110 level right here, where you have old resistance, new support over here on last Friday. Then it comes and it tests that 3110 level a little bit. So even though, you do need to update those intraday support levels a little bit to ensure, maybe you even put that down at the 3100 level as well. But a little bit of up and down, up Monday, down Tuesday, up Wednesday, down Thursday, and trying to fight to show some positive results on a Friday coming into the weekend. So a much more volatile week in terms of the up and down nature of the market than it was last week. But overall held its pattern, held its intraday support levels. And if we finish somewhere near, where it's at right now today, you're still looking at this as a potential high base type situation with a potential breakout next week.
Frank, do you like the way that stocks have played defense this week? If you're a bull, I mean, we're holding that 9, like Matt talked about. We've had some back and forth action, red candle, green candle, red candle. Now here today, we've got that candle sitting on. Is that a little hammer, Matt? What would you call that?
I'd call that a hammer. Just got a little bit of inside bullish Harami type candlestick pattern. So if you're looking at this from a single candlestick pattern, yes, right there, you would call that a hammer candle coming off that support level. If you combine it with the previous candle, you can call that a little bit of a bullish Harami. Either way, with the long waist, you got to feel like this is bullish. But to go on what you asked Frank here, do you like that it's playing defense? Well, if you don't like that it's playing defense in the face of the news that we're getting this week, especially on COVID, then I mean, you remove the defensive nature of the market, this market could get ugly.
Mm-hmm.
You got to love that it's playing defense here in the face of some, quite frankly, some pretty devastatingly negative news out there from a COVID expansion. And quite frankly, the economy might be shutting down again around the world to a certain extent, not to the broad base that we saw in March and April, but we are seeing locations shut down.
Locations, yeah. And I think the big thing on this chart is with we've really held steady at the top all week long. So that makes it pretty easy, in my opinion, at least, to say where our next, bullish action signal is from a broad perspective. I mean, you still have things like tech that you just roll with tech these days, right? But we have a very clear top and a break of that, not really anything up until that next level of resistance. So to me, that's kind of the next, let's see it get through that. I think, I think it was Tim who called it a little bit of a high base for me. And I think that's a fair way to look at that right now. I mean, right now we're still holding support. We've consolidated. I like when things consolidate and then break, after cooking a little bit. So I'm liking it for potential bullish breaks going into the earlier part of next week, assuming we obviously can break that resistance zone.
One of the big stories here today was out of Gilead, actually, COVID news, actually. GILD real quick here, Matt, if you can. Kind of did propel this little run. It was actually selling overnight. Most of the stock markets were just a little bit. They were down a hair. The Gilead news came out, and we did see a spike in Gilead stock price. It did lift the markets up a little bit. Marky, what was the news out of Gilead? And then also, after you do that, give us an update on what you're seeing in COVID data right now.
Gilead's news with the remdesivir, they showed that they had a 62% reduction in mortality rates versus the standard care provided for COVID patients. So remdesivir has been in the news a few times over the last month. In fact, one of the biggest spikes in the stock market on vaccine/therapeutic news came off Gilead well back. It was the very first one, months, it seems like months and months ago, it seems like an eternity ago. So we've heard of remdesivir before. Whenever I say the name remdesivir, I feel like I'm in a movie, the Judd Law character, or,
Contagion.
Contagion, yeah. It's like
Contagion.
What was the name of that? The vaccine?
I can't remember, but I can see why you would think that. It does. I think of Contagion a lot when I think of COVID news.
So yeah, no, but remdesivir, so showing that mortality rate goes down in this drug that we know about. We haven't had this day in a while. This tech sell off a little bit, reopening ramp up a little bit, but this is par for the course on vaccine therapeutic news. It is the playbook that happens on days like this. Tech sells off, stay at home sells off, back to work, reopening goes up. And you're seeing that rotation a little bit, nowhere near pronounced as you did 2 months ago or even 6 weeks ago. It's a mutated version of that, but it is the playbook when you have this news. It really doesn't mean anything in the grand scheme of things as far as technical analysis. Doesn't mean tech's weak. Doesn't mean opening up is strong. It's just the action you see on that day of news. That's all it is. So, I mean, it's the type of news that can create nice bearish retracement patterns, or, and a lot of those back opening up plays were a little overextended, a little oversold in the last few days. So it makes sense from a technical standpoint as well. As far as the overall COVID news, the COVID news is weighing on the markets a little bit. We had sell-offs in Asia, all linked to COVID-19 expansion. We've had deaths here in the United States, over 800 for 3 days in a row. There was a great hope amongst many in the markets and in society as a general that that lowering death rate that we saw there for a couple weeks was the new normal. We've had 3 days in a row over 800, which many analysts are linking to the expanding caseload that we've been seeing on front page headlines everywhere. So we all know cases have been going up. Well, deaths are now following. With that, we see hospitalization spikes in certain places. We see the positive test rate spiking in certain places. All in all, it is not good news. And you've seen this play out in the market over the last couple of weeks. It's directly attributable to tech strength and the opening up weakness. A lot of how you bet on certain stocks right now, whether it's casinos or restaurants or cruise lines or airlines or whatever it has, all of these reopening, really it comes down to how you view COVID. Do you view COVID as an expanding problem in your own analysis, or are you dismissive of it? If you think COVID's going away and it's a giant hoax, you should go buy all of those because there's great things and it will all go away eventually. If you are cautious or put yourself in the, hey, I just don't know camp, there's a lot of risk in those areas still because.
Is it still okay to say that in 2020? I don't know. Like, is it okay to have not all the information about something that is complex? I mean, I think that the I don't know camp should have a lot more people than people who are crowing out there thinking they know everything about this whole disease, by the way.
Well, I mean, what you don't know specifically that impacts the bottom line of a lot of these companies are how are different governments going to relate if these trends keep going on. If cases keep going up, if positive test rates keep going up, if hospitalizations keep going up, if deaths keep going up, which has been the trend this week, how will governments react? I don't think anyone expects a full-blown shutdown again, but tell that to a restaurant who can't have indoor dining, how that's going to help them, their bottom line, their viability. There's a Yelp survey out that 50% of restaurant closures right now are expected to be permanent. It's a lot of mom and pop places down. There's a lot of market impact on COVID. There just is. I know we hate talking about it. I know we should all go away. Weighed on the foreign markets last night, weighing on different markets here in the United States, benefiting certain markets in the liquidity phase we're in. If you ignore COVID completely and just want to pretend it's not there, then you're not doing due diligence on your own investing account. Now trade what you see, but you know, there's a lot of COVID news out there. Those trends are not good.
Maddie, how are you kind of interpreting all the COVID data and what's happening around the markets? Markets don't seem to be pricing it in for the first day in a long time. Gilead obviously creates a little positive bump. We were ignoring positive, virus news for a while as well, but also some of this negative news coming out. Anecdotally, you got Disney reopening parks. If that goes well, could be seen as a good thing. You've got sports starting back up at some time this month. I think baseball starting in July, NBA starting in July.
NBA reported.
Did they report? And everything goes well.
Yesterday was the last day they're reporting. I believe they started practicing. The NFL's got a long way to go, but to answer your question, Tim, it's got to be in the back of your mind, right? I mean, the data is just getting to the point where it's becoming concerning to the market in a lot of those areas of the economy reopening up theme. One of the reasons those areas of the market are struggling, and one of the reasons they did not confirm those bullish retracements, is the data in the last 3 weeks has been, that's what's been in the news. It's been increasing. And even if you're, one of those individuals that, doesn't believe in it and believe it's a hoax, you got to realize the market does care about it. And that's why when we're talking about the market playing defense, it's playing defense in the face of this information out there. What happens if the defense is removed from that equation and the market starts really caring about this? And so, nobody wants to sit here all day long and talk COVID. The entire world is sick of COVID, but you got to be aware of it. And you got to be aware that these things are the probability of the risk is starting to increase, versus when the market was just up there in May, and the NASDAQ's just safe haven, value storage, growth. The NASDAQ is every bullish argument, like literally every single bullish argument. It's a growth play with increasing revenue, or it's a safety play. Whatever day you want to make the argument on those tech plays, make the argument. It all fits, because it's a one size fits all at this point in the NASDAQ. But other than the NASDAQ, and outside of those high flying blue chip stocks like Amazon and Apple, and those Microsoft, and those stocks that people really do see that storage of value and that safety play. Outside of that, this market, and I was talking to Coach Frank about it earlier today, this market, I mean, yeah, you get out there on Twitter, you get out there in social media, and it's just like, oh, man, this is the most euphoric market in the history of mankind. Everything's just up. And I'm thinking, yeah, in the last 3 months, that's the case, but we're starting to see a little bit of shift in mentality in the S&P 500. It's not rip roaring the same way it was in May. It's when it was really playing offense. Now it's really just playing defense, and it's playing defense. That's a positive thing in the short term if you can overcome that data. But in the back of your mind, you got to be aware of it, because this thing could spin out of control on any one day where the market says, oh, well, I'm so sick of playing defense over the last 3 weeks. Let's just give up. So you got to be bullish. You got to plug your nose and buy here. I think we're going to have some really good technical setups on potential breakouts coming into next week. But in the back of your mind, you just got to be a little hesitant. You got to be a little cautious. Maybe you reduce position size until we start seeing momentum really pick up in the broad markets. Because outside, you take away the NASDAQ here, you wouldn't have that same euphoric, mentality on the S&P. You wouldn't have that same euphoric mentality on the Dow Jones. You wouldn't have that same euphoric mentality on the Russell 2000. The Russell 2000, the Dow Jones is broadly underperforming the marketplace. The S&P is clinging on to that intraday support levels, from a defensive position. And then when you're looking at these sectors here, I mean, outside of communications, which, I'm starting to really like communications from a potential breakout here, especially if you can get above that all-time high at 57.75. Communications can fly in that capacity. So let's see what communications does. When you're looking at, discretionary here, discretionary set it up as a potential buy. And I actually like the discretionary breakout a little bit more than I like the potential of the communications breakout. And then obviously you have the tech plays here with XLK that is setting up in a high base type situation that could break out as well. So those three sectors, you're really seeing separation in those sectors versus the rest of the market. And when you're looking at those distressed areas of the market, and you're looking at utilities here, clinging on to hopefully get back above that 50-day moving average. When you're looking at real estate, same type of thing, underperforming. When you're looking at consumer staples, underperforming. Although I do potentially like a breakout of the 200-day moving average right there at $60. When you're looking at finance, underneath that 50-day moving average, underneath the 20-day moving average. When you're looking at energy, broken through its short-term support levels, now in a bearish downtrend. And same thing with a little bit of materials underperforming. So this market has really separated itself from the haves and the have-nots. And, especially haves, have-nots, economy reopening up theme versus the, blue chip pandemic play theme. But, when you really take a look at the broad market specifically, it's not nearly as bullish as what you think when you read the financial news media, or when you're on social media and people are being like, yeah, I turned 30,000 into $1.5 million and all that jazz. We're coming into a situation where I think we should be a little hesitant given the face and the depth of the news out there. But until these trends and patterns are broken, you still got to plug your nose and buy.
Yeah, and that mix among sectors is going to be a very interesting conversation we have internally here today in our scouting report meeting about ranking those sectors.
Job in the stock market is?
Oh, that's a good question.
Bringing up red flags in a bubble. Nobody wants to listen.
Nobody wants to hear that.
Nobody wants to hear you. If you bring up red flags in a bubble, people are like, "You're stupid." Blah 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 blah.
Right.
You know, hey, you know, like, listen, trade the trend.
I
all
get
that,
it.
Make
I
money.
get that.
But there's a million red
But-
flags out there. I'm sorry, there are.
And I totally understand that, Mark, because it's not a good job when you're bringing up some potential, hurdles or landmines that the market might be going through in the next. But let me just remind people, next week you start a very, very, very important earnings season. And even though we're very early into this, we have seen the market not respond to the negative earnings news the same way that we have in the previous quarter. So I get it. Nobody wants to hear, you might want to be a little cautious until we see momentum pick up. Nobody wants to hear you might want to be a little conservative. You might want to reduce your position, your exposure until we start to actually see the market pick up momentum. But I don't care what the rest of the financial world wants to hear. What I care about is giving our community the level of information they need to make intelligent decisions over their financial future. That's what I care about. I could care less about anybody giving me criticism when I don't tell them just to buy. They can go find a million people out there in the marketplace to tell them to buy something. They can go to any newsletter on Wall Street, and I promise you they can give you a lot of buy rankings to go buy this company or go buy that company. I am seeing a little bit of risk increase in the marketplace. And because of that, I'm going to give our community the information they need to make the intelligent decisions over their finances.
Yeah. And I wear the wimp term like a badge of honor. I'm perfectly fine being called a wimp. So yeah, no problem with that.
Well, conservative old traders are the ones who stick, Frankie. So, I mean, that's kind of been built into us. And the longer you're in the markets, the more you just understand this concept. There's no question about it. Matt, you did mention next week's earnings. I mean, a lot of bank earnings, Goldman Sachs, BlackRock Financial, Wells Fargo, Citigroup, a bunch of them. Netflix also has earnings next week, Pepsi, United Health, Johnson & Johnson. It's not the busiest week for earnings season, but it is a big one. And we are going to get some information from some big companies, and it will move the markets a little bit. Netflix, by the way, had a big price upgrade here today, just blasting off, going crazy. Mark, which firm upgraded Netflix? You remember? I didn't see
everybody
all of them.
Listen,
It was Goldman.
Goldman did.
Goldman did.
What's that stat? Like 92% of all ratings are buy or overperform.
They held a buy rating in the tech bubble. 90% of companies had a buy or hold rating when the market dropped 90%. So
yeah, analyst ratings really should be taken with a grain of salt. Like
they're all playing catch up. Markets are bubbling. They have to keep increasing these price targets.
Tim, even in the subprime meltdown during 2007, 8, 9, and 10, those bond ratings, right? The junk bonds, the subprime loan bonds, the CDs, those types of bonds, they kept their AAA rating throughout the entire crisis, even though the debt that was backing the bond was non-existent. I mean, people that trust Wall Street on their rankings, I mean, come on.
One of the reasons why Moody's.
I mean, what are we doing? You got to go look yourself really quite extensively in the mirror if you're trusting Wall Street on rankings in 2020.
Yeah.
It amazes me. Nobody in America trusts Wall Street. Nobody in America does. Nobody does. Main Street does not trust Wall Street. But if Wall Street comes out and says, buy XYZ company, they're like, oh man, we should listen to the experts.
Well, I can trust Wall Street on one thing. I mean, they will lie, cheat, steal, and do anything they can to maintain their edge over financial markets. I know that. That has been proven out over the last 15 years of my career. Let's keep working through the markets.
Goldman did upgrade Netflix 540 to 670, which is the highest price target on Wall Street.
Wow.
Yeah, they were real bullish.
Yeah,
I don't understand the upgrade right before earnings.
They must really like the AMC buyout.
Why do these analysts upgrade right before earnings, though? I'm not going with the AMC thing.
That was the jab.
That's
bait. That's bait.
We're not doing it.
That was a test. That was a test. And Tim's like, I'm not touching that.
Oh, he literally tried to chum the water, and Tim's like, no.
No, not going to do it. Crude oil next. On the backs of a lot of the risks that you guys are talking about, actually, the IEA came out with some data that goes right in line with what Mark's assessment is, and our conversations going on here. One of the big risks they see is COVID-19 outbreaks. And Mark, they actually came out and they painted a demand picture for the back half of this year and next year as well that was not that glowing. What did you learn from the IEA report, if anything, Mark? And do you think oil has more COVID risk and these kind of risks that we're talking about than even the broad market?
I don't know if it has more. I know oil doesn't have more COVID risk than, say, a cheesecake factory, right? But it does have COVID risk. The only reason it doesn't have more risk than Cheesecake Factory or its type is that it's about supply has been cut so much already, just dramatically. But supply has done its heavy lifting to this point. You're not going to see a lot more supply cuts. In fact, you might see some supply increases. So all of what happens from oil from here is on the demand side. Supply provided a nice floor at the bottom, has provided a nice multi-month trend. Supply is about as cut as far as it's going to get cut. It just is. It's now all up to demand. And if society isn't going, again, it's the whole thing with COVID. Let's say you think COVID's the stupidest thing in the world. It's this Bill Gates, Fauci, gigantic hoax. It's just this democratic thing to drive. That's fine and all. But if people aren't out there driving, if people aren't there traveling, if oil isn't being used in industrial applications, then the demand isn't increased. So it doesn't matter if it's a hoax or not. It matters if it's perceived as serious. And I think a lot of people perceive it as serious. You see that in the driving patterns. You see that in the flight patterns. Airlines came out with a lot of capacity things this week. They weren't great. So for oil to lift off from here, you need some kind of spark, and that spark has to come on the demand side.
That being said, I mean, you still got to like the defense right there on those moving averages, Matt. And if you do catch a breakout, I still think there's a trade there, right? I mean, even with this increased risk with COVID and all that kind of stuff, markets aren't pricing that in right here. Matt, how are you reading that chart, and how would you approach a potential breakout up here at those pivots?
I typically, my morning routine is I check the news before I actually check the price action. I just want to get a kind of an overview of the entire marketplace, kind of the psychology behind the market before I really kind of go into looking at it from a technical perspective. And when I saw the news today that the IEA came out and warned on oil demand over the next year, they actually downgraded the amount of oil that we're going to be consuming on a daily basis from, I want to say, 92.5 million barrels a day to down to about 92.1. So a reduction of about 400,000 barrels, which you might look at and they're like, hey, that's not a lot. Well, that's also about 4.5% in oil production. That's actually a fairly big number. I thought, man, is it going to finally violate the pattern and break that 20-day moving average and throw a monkey wrench into all of this, type of analysis? And I'm thinking, it could get ugly for oil. And then when I came in and I loaded up TOS and I was going through my daily routine when I'm tracking the indexes, tracking the commodities, the sectors and whatnot, I'm looking at crude. I'm like, wow, I was really surprised by the hold of that 20-day moving average, to be honest with you. This is one of those moments where that type of news could really break this trend, could really break this pattern. And yet, what did the market do? It tested underneath that 20-day moving average. The 20-day moving average is right there at about 39.15. It broke through that 39.15 level fairly aggressively, but then rebounded right off that, coming right back up. So, even though the news is negative, you got to take the market response as a positive, given the fact that it held its 20-day moving average. You're still not looking to trade this directionally until you perhaps break out. And for the aggressive traders out there that, like to trade aggressively on crude, updating those triggers is something that we constantly do as short-term traders. And the one thing I was really concerned about, as the market kind of hesitated over the last week and a half, was this fake out here that we saw when it broke out at $40 2 weeks ago. when it broke out of $40, I mean, we were looking at that price threshold, and every single one of us were saying, yeah, that is a strong buy above $40. It had that little fake out where it tested above $40 for one day, came right back down, blew up that $40 breakout that a lot of oil traders were ready for. And now when you look at this from an intraday perspective, you see some real good evidence on a potential trigger right there above that 4110 level. So for the directional traders out there, the aggressive swing traders, the Delta dogs out there, they're probably looking at that 4110 level saying, okay, we're going to wait for that to trigger above that level, and we're not going to give a lot of credence to that one wick on the fake out. That's the aggressive traders. But I loved what Frank said, earlier today when we were kind of breaking it down. Coach Frank's like, yeah, I like that, but there's not a lot of distance between that and that 200-day moving average. I think it might be best, and this is Frank talking, I think it might be best to throw a nice little grenade, a little bit of a bull put spread to bring in some cash flow in that environment. If you do get the breakout, maybe you don't do that bull put spread until you see the breakout, but aggressive traders probably looking at that 4110 level as a potential breakout candidate. More conservative traders, who want a little bit additional probability, probably are looking at a bull put spread underneath these support levels right here, probably right around 35, underneath those support levels if we do get that breakout. Remember, bull put spreads in the futures market can be quite lucrative from a cash flow perspective, given the leverage. I mean, you can come all the way down to 3150 right here, 10 delta type contract, sell a nice little vertical spread here. Let's take that out to about a 1 point spread, just to kind of not 3150, 30 and a half, bring in a little bit of credit, $600 for 2860 on 10 contracts. That's a pretty decent little return on investment when you're looking at a credit spread. So I like either one here on oil. I do like it. Don't get me wrong. I don't like the IEA news the same way nobody liked the IEA news today. But you got to like the fact that a market did respond bullish in the face of that negative news, and thus, trusting that breakout a little bit more from a directional perspective. But I do like Frank's take on the bull put spread if we do see the breakout. I wouldn't do it unless we see the breakout. But if you see the breakout, I do like that bull put spread.
Yeah, you definitely want to see the breakout. And, the big issue I have with crude is it just is a pain in the neck right now. I mean, I think we all see the breakout, but then you've got, do you use the top? Do you use the intraday over the last few days? What about the 200? What about the 50 on the weekly chart? There's so many things that make it kind of a headache, right?
Mhm.
And so if this breaks, I'll call it a breakout because that's exactly what it would be.
Yeah.
There's probably easier things, in my opinion, at least, to trade right now. And so I'm not all that interested in this breakout, but I know a lot of people are, and I'm pulling for it because, I probably know a few people who will be in that breakout. So if it happens.
I'm never going to fault a trader for taking a confirmed breakout trade on anything, really. I mean, as long as it maps out their rules, reward to risk, all that kind of stuff. I do like the theta style approach to this. If you are going to play it, I think the analysis is really, really good from that perspective, because I just don't trust the delta side of it right now, to be honest.
Yeah, and one thing, and maybe this is just me, it probably is that, but one thing I've noticed with crude is when you've got good separation between the 9 and the 20, and you get those little pops, 3, 4, 5 day consolidations, pops, and this works both bullish and bearish. It seems like it's so much easier to trade in that type of environment than when you kind of get down into these ranges. You have the 9 catch up to the 20, go sideways. So maybe my bias is that I've had better success, when we kind of have a full head of steam and playing those little high base type of breakouts than the more elongated breakouts. But it's definitely something I've noticed on my end.
Mm-hmm. Let's talk metals here next if we can. Gold kind of holding around that $1,800 mark. There's not really much to see there in that perspective. Couple little red candles there right on the moving average. Silver holding as well at 19. Matt, just give me a quick read on gold, silver, what you're seeing in those two.
Yeah, just a little hesitation. I mean, silver threatening that breakout yet again right there at $19, is clinging to above that $19. I like that breakout. I think everybody here likes that breakout of $19. And, gold playing defense a little bit on that 9 EMA, trying to hold the $1,800. I could care less if gold holds that short-term support level. Really does. I really could care less. Silver, it's got to hold 19. Got to see that breakout. Got to see the continuation on silver. But you treat silver a little bit more aggressively than you treat gold, don't you?
I think so.
I think so. Yeah, you
so.
would. Yeah. Well, it does move faster. I mean, the volatility of it on a day-by-day basis, you have that, and I think you can play this much more delta from a swing position style. Gold is more, in my opinion, position investment type instrument. So I think you can be a little bit more aggressive with it. Yeah. Yeah. By the way, I do want to get Mark's take on one quick thing. Mark, if the world was so worried about COVID-19 outbreaks, and all this kind of stuff, why is copper up so much? Because copper's had an incredible
Copper,
run.
dude, is, I mean, people can say all the bull cases they want. Copper is the PhD of the markets. It is the best bullish argument you have. Now, the counter to the United States equity market that copper would say is, hey, the rest of the world took care of COVID-19 in a nice manner. They're all getting back to business. Whereas Brazil, United States, basically the Americas as a whole outside of Canada, you guys have done a terrible job with it. So the rest of the economy is getting back up and running, a lot of demand, a lot of stimulus out there. So that would be the counter argument to American equities. But as far as emerging markets, what's that emerging market ETF that Tyler likes so much?
EM.
Mm-hmm.
Copper is saying, and I've heard a lot of analysts say as well, that that's a much better place to put your money.
It's incredibly bullish. I mean, it's up huge on the month. Obviously, we're breaking out of some ranges there, Matt. We've been upgrading copper for quite some time, but even like today, we're up 2.5%. It's looking strong. Obviously, China, and like you bring it up, one of the top users of copper in the world. I think they are the number one.
They own the copper universe.
Mm-hmm.
When you're looking at copper here, you're not looking at the American economy or the American financial system. You're looking at the Asian markets here.
Mm-hmm. Mm-hmm.
And Mark's absolutely right. Copper would not be up like this if it wasn't for their response to COVID and them handling the COVID situation far more superior than we have.
Beautiful chart. It's definitely very, very bullish. I'll tell you one thing that's not very bullish is the dollar kind of sitting on support, not doing much.
I want to say copper's been our second highest rated.
Metal
it's been up there. Yeah.
Gold was higher. I'm sure
gold's been higher, and
yeah,
maybe silver may have, yeah, it's probably 2 or 3. I just can't remember exactly where we had it versus silver.
Let me look.
I think copper. I think it was gold, copper, then silver.
We have copper at the 20. With silver at the 25. So
and FCX, you could trade SCC. There's not a great copper ETF, unfortunately, to trade. So you have to find individual companies. But FCX has had a nice run.
Yeah, that's usually where I look for copper.
And so it's had a nice run along the way. It's not the smoothest trend, but you're never going to get that out of a commodity stock. You're never going to see those beautiful trends like Apple or Microsoft or something like that. But that's a pretty steady pop and hop trend, for FCX. So
this is your ETF right here for copper. It's CPER. It's the United States Copper
Index. It doesn't have any liquid,
but it is so illiquid. We're talking tens of thousands of shares traded daily. There's not a very good liquid ETF for it, and that's why most traders, when they look to play copper, they're looking at I put up FXI, but they're looking at FCX, Freeport McMoran, which is a copper miner.
And I guess why it's one of Tackle Trading's favorite is it has, I call it that little gold kicker. While it does about 75% of its business in copper in volume,
it's got a little
it's got about 22% in gold. So it's got a nice little gold kicker to it.
Yeah, I like that.
Yeah, definitely. I love this company as well. The options are liquid. It's got earnings coming up here in a couple of weeks, but that's been a really, really good performer here during this copper run. And definitely
and breakout, Frank. Are you a little interested in a breakout on FCX there?
Absolutely, I am. How can you not be? You've got the backdrop
on that 200 on the weekly.
Yeah. Oh yeah. You've got some interesting things. If we can keep this run on copper, this is a good looking chart. Absolutely. Break above that 200. You got a little chop at the top, right? So if you're not in already, which good chance, of you probably are. The little chop at the top, going back, back a bit, but clear that, there's really nothing until we get into, the high 14s, which doesn't sound like a lot, but that's a pretty decent percentage move.
Mm-hmm. And Carolina has a good question in the chat. Where do you buy gold coins? And I'll even include silver in there as well, Carolina, to make sure they are real gold. Government issued minted coins, whether it's Canadian coin, US coin, something like that, you know what the purity is. It's usually the better place to start for a new investor into physical metals, Carolina. So that's one thing that you would look at. And actually, we have a partnership with Zaner Metals there. I'm glad you brought that up, Matt. The great Pete Thomas, who's been a great guest on our podcast many times. If you go to that partners page, in fact, I'll grab that link as well and drop it in the chat, but you can buy them directly from Zaner. Yeah, that would be a good place to start.
Yeah, and what I would say, Carolina, is when you're buying physical metals, historically, I always liked going into like a coin shop and just kind of browsing around. But Silver Eagles are kind of my go-to when it comes to silver. They're just a 1 ounce silver coin, 99.9% pure silver. But if you're not going to do it in a coin shop, you got to find a trusted broker. And, I've known Zaner's, Matt Zaner's the CEO and owner over there at Zaner's Corporation. Pete Thomas is our boy over there at Zaner's. And for those of you who've listened to the Trading Justice podcast, Pete Thomas has been one of our, good friends over there on the Trading Justice podcast for a long time now. And Pete Thomas is actually coming on the Trading Justice podcast on Monday to give us an update on. That is confirmed,
Nice.
Tim. I was going to tell you and Mark that.
Great.
Yeah, I probably should have informed you 2 days ago on that. But Pete Thomas, I got on the horn with Pete, and Pete's coming on there, and I trust Pete, Carolina. And when you're buying physical metals, quite frankly, there's some nonsense in every industry. There's no doubt about that. There's some nonsense in the silver and gold and precious metals industry. Find somebody trusted. I trust the Zaner Corporation. I trust Pete Thomas. And not only that, but Pete he's one of those brokers that is going to take care of you in every capacity. And so, and like literally, if you ever decide you want to sell, I promise you will have a buyer in Pete Thomas and Zaner Corporation to buy back your physical metals if you ever decide to get rid of them. So I like Zaner's. We've had a very successful partnership with them for a very long time, built on trust and likability. So if you want to support Tackle, you want to support a broker like Pete, if you're going to buy it, I have not found anybody I trust more in this space than Zaner's and quite frankly, Pete Thomas.
All right, two things. One, if you like, Pete has made some amazing calls on the podcast previously. If you like precious metals at all,
Cobalt, his call in Cobalt.
No, he's made some amazing calls on the podcast. If you like precious metals at all, that's going to be a must listen on Monday night when we release that. 2, learn how to wire money so you can get $50 off and don't put your credit card. I'm always looking out to save you a few bucks, right? Learn how to send a wire to Zaner's if you're going to buy physical metal so you can save that credit card fee.
There
you don't have to pay that credit card processing fee. Yeah.
There you go. Nice.
Good call.
Nice.
Looking forward to talking to Pete. One thing I love about Pete, by the way, is just his stories. He has more stories than anybody I think we have on the podcast.
I'll just give you one call that Pete had on the podcast over the last couple of years, and he's been on the podcast quite a bit over the course of the last couple of years. But I remember,
Palladium,
not platinum, but Palladium here /PA. Pete was on the podcast right here, guys, and he called a massive surge coming into Palladium, and that's when Palladium was at $1,000. When it got above $2,000 right here at 2,200, Pete was on the podcast. He goes, because I was looking at this potential breakout here at that 2,350 level. And I was like, hey, Pete, what do you think about this breakout? He's like, Matt, I see it technically, but there are things I'm seeing in the mining communities. There's things I'm seeing in the supply chain that is very concerning for Palladium. I'm coming off my Palladium call. And I'm going to tell you right now, guys, when Pete told me he was coming off his Palladium call, I came off mine without even doing research. That's how much I trust Pete Thomas. I mean, he has been so accurate on his calls, because if you're going to be an expert in this space, right, you can't just like the miners. You have to get into know the miners with your intimate detail. They got to be part of your life to a certain extent. And Pete understands all the miners. He understands this area of the market better than anybody I know in the marketplace. When he comes out, gives me a call, I trust that call. And so we're going to have Pete on the podcast on Monday to give us his update. But if you're looking to buy precious metals and you want to support tackle trading, and you want to get with a quality broker, I'd get with Zainers and I would get with Pete Thomas. And Carolina, we might have spent a little bit more time on that answer than we usually do. But when it comes to Pete Thomas, we all kind of get defensive over Pete. We all love Pete. Every one of us love Pete.
Yeah, I really enjoy the weekly show he does. I think they do it just on Zainers. I get it from Twitter. I follow him on Twitter, but they have a little 20-30 minute weekend metals. I've really enjoyed adding that to my routine.
Oh, interesting. I'll have to check out his Twitter follow.
This is going to turn into the Pete Thomas 5-minute praise session, right? But I got to just add to it. One of the things I love about Pete compared to a lot of the other gold people out there is that no matter what the market conditions are, a lot of these gold selling places, they're always just trying to artificially scare the hell out of you that the whole economy is going to collapse. This is going to happen. You need to buy gold because they're trying to instill the living fear of God. Now, maybe the economy is going to collapse, right? I mean, there's a lot of worries out there, but I never get that sense for Pete. I always feel like I'm getting a straight shooter.
That's because Pete is a 40-year veteran trader in Chicago. He doesn't care about your tinfoil hat. He can care less about that. He wants to create a relationship with his clients, give his clients good advice over time. And when my mother asked me, she wanted to buy $20,000 worth of metals. And when my mother asked me where she would go, I sent her to Pete Thomas. And I didn't even call Pete and said, hey, my mom's, will you take care of her? Because I knew Pete would take care of my mother the same way he would take care of everybody's mother. That's how much I respect Pete Thomas.
Yeah, that's a funny story too, by the way. When Pete called, didn't your mom hang up on him?
Oh, my mom, I'm not kidding. I literally had called my mother and said, listen, my guy Pete Thomas is going to call you. When he called her, she thought it was like some telemarketer calling her. And so she was rude to Pete. Pete called, he's like, Matt, I tried to get a hold of your mom, but she wasn't having none of it. So I called my mother back. I'm like, hey, Mom, that's my guy. That's my guy from Chicago, Pete. And she's like, oh, that was the Pete. I'm like, how many Petes do you know? Like,
that is pretty funny.
Well, she doesn't hear that well. It's very possible I can make an excuse up for Blondie, but I can imagine the conversation.
Don't you ruin my story.
I'm sure it was funny. Who's this? What? No, not interested by, I can see Blondie doing it right now. Let's move on. Let's talk about the dollar here for a second. If we can just take a quick peek. I don't see anything in the chart that grabbed my attention. There was a news story I just want to get Matt and everybody's take on, though. I thought was very interesting. Frank, I don't know if you saw this or if you came in when we were talking about, there's a little town of 2,000 people about the size of Huntington, Utah, which is where I grew up in, called Tenino, Washington, that is now printing its own money. They're giving their citizens $300 a month, up to $300 a month, $25 bills. They're about the consistency of an index card, from what I understood. They're green. They've got George Washington's picture on them, a little Latin phrase, and citizens can now just go use it to support local businesses.
That's cool.
Matt, number one, is it legal? I didn't think that you could just start making up your own money in cities and what. Number two, Matt, what do you think of that story? Because basically it's an anti-government bailout type of thing. They're like, okay, we can handle it
locally. So cute. Only in the greater Northwest, but it is cute. It's so cute. A city saying, we're going to print our own Shroot bucks. What's that? And
I forgot about.
I did too.
We're gonna print our own True Box, and then there's Stanley in the back. What's the ratio of Stanley nickel to Shroot bucks? And he's like 1,000,000,000 to 1. He's like, all right, good. It's a cute story, and I could see them being like, yeah, we're acting defiant, and I'm thinking, well, you do know that there's probably a 1-to-1 ratio with the dollar, since there's no supply and demand, and it's not a freely floated currency. And you do know that $300 that you're getting in Stanley nickels or Shroot bucks has to be priced in some other value of some other currency, because you do know that your government is probably buying those goods using US dollars, which is just a creative way to give a nice little 300 dividend in dollars to people, but just call it Stanley Shroot bucks. So yeah, it's cute. It's
I think
dumber
you're
than hell,
assuming
but
they
it's
know a
cute.
lot of things, Matt.
Yeah, it's just cute. That's my way of not wanting to rip on people for doing something.
Dude, I
fairly
want one of them
ridiculous.
just for a collector's item.
I want one of them
$25
the same way I
Tamino
want
bill.
$100 trillion Zimbabwe bill. Like, yeah, it's worthless, but funny.
Buy a cup of coffee. I thought it was an interesting story, to say the least. Not much in that chart on the dollar, by the way, here today. I did see a bunch of chatter about the stimulus packages that are coming down the pike in July. I did also see that Mnuchin came out, Mark, and said they are not going to extend the $600. Period. They basically said we will not incentivize people above what their paycheck was. So they do want to have something to
Republicans have
do
been
there.
spot on from the day that thing passed many months ago. Lindsey Graham, a couple days after that, was speaking to a bunch of donors in South Carolina, and he said, "We screwed up on that. There's no way in hell that we are letting that happen again." And they have been spot on. That $600 is not getting extended. Now, whether there's an extra stimulus check for people under $40,000, that's been floated. Payroll tax. One of the biggest market risks coming up is that you're in election year and you got a wide gap. Democrats want to spend on this huge bill. Republicans, some of the more fiscally conservative, if there are any left, right?
There aren't. Let me save the time.
They're like unicorns.
The ones that would at least like to, in their wild dreams, pretend that they were, are like, listen, but the $600 not happening. Now it'll be interesting to see if. Did you know that in the 2008-2009 crisis, there was additional unemployment benefits? Guess how much they were?
$50.
$50.
$25.
$25 a week.
Federal. So maybe there's something, right? 50, 75, 100, 200. I don't know. The 600 not happening. Now that could be very significant for a lot of individuals. I don't know if it has market ramifications, but if there's tension, you can see, can you guys see a big down day 2.5 weeks from now when there's that headline, sides far apart, no, deal looking to not happen? You can see a big market down day on that type of thing. But I have a hard time to seeing in an election year them not eventually coming together and passing something.
On the other side, I could see a big update if they splash another 1.5 trillion into the economy in various forms and this and that.
It's going to be a market move. Listen, we got a busy couple weeks ahead of us. There's going to be a lot of headlines and a lot of volatility, both up and down in the market. Come up with a game plan on how you're going to play it.
Yeah, but until we actually see what they do and how they do it, it's just going to be speculation until then. But I do believe it is one of those storylines that is not going to go away until we get more clarity on what it is. Let's move on. Let's start talking some companies here today, if we can, and have some conversations about individual charts as well. And I know, Frank, you've got some interesting charts you want to bring up at the end that we're going to get into. Let's start with Carnival Cruise Lines, if we can here. Matt, earnings here today. It wasn't on my Finviz screener, but I saw it in my other news feeds as I was going through it. And Carnival, obviously, one of these distressed area plays. Earnings came out. The headline I picked up on when I went through and read through the notes of what the CEO said, basically the standout was that he thought his 2021 demand for cruise lines was within the range of historical demand. That's still kind of painting out that picture that next year is going to be fine, going to be okay. I did not get the EPS numbers. Matt, did you? Did you get data on this one?
Let me just update really quickly. It was a nasty earnings number. It came in at a loss at a negative $3.30 a share on $700 million in revenue. That was against the estimated of 183 and a revenue of $3.9 billion. Revenue fell 85.5% year over year. This is one of those scenarios you're looking at that and you're like, why is this even up in any capacity? Who is buying this? This is an absolute devastating report. And yet you hear the news, oh, well, they're going to be back at it in 2021. Let me throw a little cold water on that to Mr. CEO or Mrs. CEO of Carnival Cruise Lines, because I have no clue who it is. Not going to happen. It's not going to happen.
Now it's not going to happen. It's not.
It's not going to, even post-vaccine. you're not going to see it. Consumer behavior is not going to return to the same degree that it was pre-pandemic. Not going to happen. I believe in what the Airbus CEO said last week, that travel and consumers' vacation choices will be more in terms of regional than it will be internationally. I agree with that sentiment from the CEO of Airbus. I thought it was a very, very, very pointed statement last week. I don't believe in a V-shaped recovery next year. I think the data has been very, very, very compelling against a V-shaped recovery. And unless you get a V-shaped recovery, these cruise lines and these airlines are not coming around from a business perspective post-pandemic than they were pre-pandemic in 2021. It is not going to happen. That is the CEO in a struggling industry, in a struggling company, in a struggling industry, begging for positive news. I don't believe it. I don't buy it. I just don't believe it's going to happen. I just don't.
Yeah.
Well, no, and one of the reasons it's up is they said that their 2021 bookings are within historical ranges. Now, what the market is ignoring on that is, while they are in fact within historical ranges, those cruise tickets are being sold at severe discounts in order to try to drum up demand and have very generous cancellation policies.
Well, not only that, Mark, couldn't it have been a lot of the people who can't get the cruise now that they were giving them the coupons, the vouchers for future cruises as well? Like a lot of the people who purchased in the summer, they already had cruises purchased. And I know that these cruise lines, the airlines, they all did a very similar thing. We'll give you more than the value of your cruise if you book it in 2021. Just don't cancel, right?
I tell you, I would be a consumer. I love the ocean. I love water. I like the cruise. There's gaming and food, and I get to sit on my ass, and there's water around me. It's a delightful atmosphere. And if I can get a cheap ticket, count me in, as long as it isn't a floating petri dish. So like that thing really has to be solved before consumer. And on the travel and airline, this is a really, really distressed part of the economy. American Airlines today, AAL, told Boeing that those 17 MAX 737s that they ordered, not taking them unless they can get financing, which they can't find right now, to pay for the aircraft. The Fed can buy Apple bonds and Pfizer bonds and Budweiser bonds and Verizon bonds and AT&T bonds and support the blue chips all they want. If the virus is not contained, there are going to be some big casualties and names that are front page headline when they declare bankruptcy, because the Fed is really, really tactical in what they're doing. They do not want to be on the hook for buying the bonds of a company that goes out of business. You saw that in the top 100 bonds that they bought. Blue chips, Apple. I mean, they were buying Apple bonds, for crying out loud. No American Airlines, no Carnival Cruise Lines. They're not buying these bonds. And these companies, we saw that with AMC just the other day, they had to beg to try to get some financing to stay afloat for a few more months. There's more and more reluctancy in people lending money to buy bonds. You saw that with Wells Fargo today on the consumer side. Did you see what they jacked up the ability to get new mortgage standards for? They said that Wells Fargo is now requesting new clients who want to refinance jumbo mortgage to have at least a $1 million balance, up from 250,000. There's some things going on that this bubble market is just blowing past not caring. So listen, Microsoft's going to be great. Apple's going to be great. These stocks will probably continue their trend very shortly. There's going to be a lot of casualties and a lot of companies that take years and years and years to recover from. How does a bank make any money if they're not lending it?
It's a good question, by the way. The better question, I think, is in the chat here. Marquis says maybe Netflix should buy Carnival as well.
Well,
watch some original programming on a boat, Tim. How does that change your opinion from yesterday?
Hey, all I'm going to say is this, Marquis. Netflix has added $7 billion in market cap just today. They could take $500 million of the market cap they literally made today and by all those distribution areas and negotiation that they would corner that market by literally spending just, and this isn't a one-to-one, but just go with me on it, just spending literally like 6% of the market cap they made today. Just 6% of the market cap they made today. That's like you going out and making your salary and saying, I'm going to go buy me some lunch today. That's what Netflix has to do to buy AMC, is saying, I'm taking the company out to lunch. That's it. That's it.
Mhm.
Hey, Matt, can you remember one time, because you've been wrong, I've been wrong. Can you remember one time where we both were adamant on a position that we were wrong?
You guys are doubling down. You so
Yeah.
want to do this again.
Netflix
You're
should
so
buy
interested.
AMC.
You are so excited.
No. Listen. Me and Mark, we will go at each other a lot. There's no doubt. We will go at each other even if we agree with one another, just to test each other's, negotiation or, diplomatic powers or whatever, however you want to put it.
Or as we call it, fight. Those who know them best.
We will fight if we have
By
to.
the way, I just sold another naked put on USO.
But if me and Mark are like together on something, it's
I
usually
didn't really.
pretty good.
Dude,
Yeah.
listen,
It means Tim's on the other side is what it means.
Sure. It sure does. I mean, absolutely. And they're picking on me, Frank. I need somebody come in. And,
I know.
and get
They're not very nice to you, Tim.
That is not true. That is not true at all. We are not playing out Grandma Monday 20 years late. We're not doing it. We're not going down the Tim's picked on route. It's not
Matt and I like to fight
It's
each
a
other, and we like to
ninja.
take opposite stance. You hit us with a question yesterday, Netflix with AMC, and we both independently were like, that seems like a good
It's
idea.
a fair perspective. We're split. And by the way, the entire community is split. It's a 50-50. It's a 50-50. Half the audience says, no, they shouldn't. So I'm taking it as a too close to call race.
Just an agree to disagree, right,
Agree
Tim?
to disagree. Absolutely.
Still want to buy some
This is
AMC.
like Trump claiming like 4 million uncounted votes.
I still want to buy some AMC just so if Netflix bought it, it could be the sweetest money I ever spent in life.
This story will go away at some point unless Netflix actually does buy AMC, and then I will never hear the end of it.
Yeah,
for
we'll
the
forget
rest
about
of
it
my
eventually.
entire life.
It's only a matter of time until you say something else to get you equally mocked, Tim.
I mean, let's be honest. The only reason we ever talk about AMC Mall is because we're in a pandemic and they're affected by it. Did we ever bring up AMC once ever? in the
Can't
history of
ever
anything?
remember talking about them. No.
Mm-hmm. By the way, on CCL, I do want to go back to that one for just a second. Frank, is that shortable? I mean, I know we're up 8% today, but I was looking at there's a pretty clear level of support now. Now you're post earnings. The headline was from the CEO talking about 2021 demand, but the fundamentals, quite frankly, are awful. Could you short below this little ledge right here?
You could. This is a weird place, though. I mean, I want nothing to do with these super distressed areas right now, really at all. For a lot of the same reasons I don't like to deal with Boeing these days, is it can just, out of the blue, a day can happen, right? That just blows up your trade. Even though it doesn't really maybe change anything bigger picture. So could you? Yeah, I absolutely wouldn't have any objection technically to going below that little floor. I think that would be pretty clean from a technical perspective. I promise you, I wouldn't be buying against you if you did that. But I don't love this area just from a trading perspective right now. It just seems like just leave it alone. There's other things to work with. Seems like a lot easier to maybe play some of the breakdowns in oil or in energy, or in the banks there's lots of them out there. I think there's just probably easier places to try to play your trade. So I don't like when things feel like the random news story can just bite me just cause.
Mm-hmm. Yeah, it's a fair point. I mean, a lot of these news-driven stocks, obviously, they're going to create some volatility on a day-by-day basis, and there are some good-looking charts on the downside. I'm sure we're going to be putting some of those on our reports over the weekend. Next one here for me, Matt, if we can, Amazon. We'll bring this one up. They actually are doing a $1.3 billion deal to buy a company called Zoox, which is a fully autonomous car-making company. There was another car-making company in the news here today, Rivian, who is a non-public kind of competitor, I think, as well to the Tesla ideas and whatnot. They're coming out saying, hey, they're raising $2.5 billion to push, car making out there as well.
And pickup truck. They're trying to get the first electric
want to beat
pickup
Nikola,
truck.
right? Like they're going after Nikola as competitor. Is that kind of what you read?
Yep. That's kind of what it sounded like.
Is everybody going to get in the car game here at some point? I mean, Google's going to be building autonomous cars, I'm guessing, and Amazon and all of them. I mean, they're all trying to compete here. Does it affect Tesla, number one, at all? Number two, is it a good thing for Amazon, these little small deals, Matt, grab your attention at all?
No, and I don't know.
No, it's Amazon.
So I don't think it matters to Tesla whatsoever. It's cool. It's an interesting race. It's one of those, everybody wants to be first. Once the first happens, to me, that probably we move on to new things.
Tim, it's honestly, it reminds me of your two dogs. Tim has two dogs. Tim has an old wily veteran by the name of Max.
Sure.
Right. Little boxer.
Bad hips. Right? Yeah. Can't move that well.
Old, cranky, ornery, just doesn't want to be bothered. And then he has this annoying little puppy. This, what is it called?
His name is Freddie, and he is a dachshund.
And he is the most annoying dog you'll ever meet. Just yappy, bark, 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 bark. And he's always just, barking at Max and just messing with Max. And Max doesn't care, not in any capacity. So all these other annoying little news stories, and they're all coming out there trying to compete with Tesla. Tesla's Max. The other ones are Freddie. Tesla doesn't care about Freddie. Doesn't care about Freddie in any capacity. Tesla could turn around and stomp on Freddie the same way Max could bite your dog and kill it in a second. Tesla could care less. Care less.
Yeah. Little Freddie does not understand.
And by the way,
the closeness he's come to death.
No, it doesn't. And neither does a lot of these other companies that are trying to, basically recapture the magic that is Elon Musk and Tesla. And the thing that they don't understand, and what Cody said earlier in the pre-production show is when we were talking about the Riviera news and the Amazon news in comparison to Tesla is, well, aren't they missing one very, very important component in recapturing the magic behind Tesla? And that has nothing to do with the cars, and it has everything to do with the vision of Elon Musk. So if you can recapture Elon Musk, then you can recreate the magic behind Tesla over the last 5 to 7 years. Outside of that, there's a lot of competition in this space.
Yeah, no, there's no doubt about it. And by the way, Swin, dachshunds are famously stubborn and they can be annoying. There's no question about it. You're either
they're terrible dogs, Swin.
Either you're a dachshund lover or you're everybody else.
I had one growing up.
Tolerator or you're everybody else.
I love my little dachshund.
He's
going to be a good dude.
Apologist or you're everybody else.
Oh, they're sweet little puppies. By the way, Guy Cohen, who is a wonderful guest on our podcast, also owns a little dachshund. He loves that little dog as well. If you love dachshunds, dude,
I see a lot of similarities between you and Guy.
I see that as well. I'm with you. All right.
People's dogs are like their owners, or they look alike, or they have the same personality. Is this one of those situations? Are you Max, really. Tim, or are you Freddie?
Dude, my most loved dog of all time was my Sadie. She reflected my personality. She was chill, she just was cool as the other side of the pillow. But
that Dane was amazing.
She was an amazing Dane, no question about it. We've even thought about getting another great Dane. I just don't think it would play well with the little dachshund. But
chose Freddie. I like this. I don't know what's worse. You choosing a dachshund over another Dane, or you going against Netflix buying AMC? I don't know what's worse.
Yeah. Dude, I love that little dachshund. He's going to be a good dude. Frank, you'll have to meet him one day.
You think there's a pro dachshund community that's part of the cancel culture?
Dude, people love dachshunds.
Okay.
Yeah, absolutely love them.
Is it the same percentage of people that short Amazon?
1%. Maybe. If you have a dachshund out there, by the way, if your team tackles, send me a picture of your dachshund on any social media. It will just warm my heart, and I will share it with Matt and kind of turn him here, Frank. I doubt that. I'm more likely to convince him.
You got to turn 42 years of history with dachshunds, because your little Freddie is grandma's Freddie that I could not stand growing up.
That's right. Yeah, that's right. Swin, the dog in Toy Story.
There's a backstory to the dachshund hatred, guys.
That's right.
He's never letting that one go, Tim.
Ever.
Does the news around what was the company that wants to beat Nikola to market though?
It doesn't matter. All that matters is you need to look at Tesla's breakout.
But maybe it doesn't affect Tesla. Maybe it affects Nikola. Because that's obviously much more of a direct competitor in that regard. They want to make electric trucks. I believe it's Rivian, a private company. Just a reminder, Nikola has not put a product out there that they've actually sold. They've not made any money, and they don't have Elon Musk either. So no, I don't think it affects Tesla at all. Obviously, Tesla's up like 6-8% today, probably on an upgrade. But could it affect a Nikola when this competition comes into these markets here?
I still don't know if Nikola is a real company.
Yeah,
yet.
it's hard to really say much about that right now. I think it's still up in the air whether that is something or is just something today.
Mark, I know you want to buy some of this at a certain price, like $20 a share, something like that, if it went all the way down. Do you have any qualms about this company with increased competition coming into the market?
Dude, someone's going to win outside of Tesla, right? Like, I believe, like many people do, I mean, obviously lots of people do, look at Tesla's run, electric vehicles are going to have a larger and larger percentage of the marketplace as time goes on. I think everybody's on board with that. Now, they're not all going to be Teslas, right? They're going to be other brands. Who succeeds in there? I have zero idea, but I'll take a gamble here or there at different prices on different things, because I mean, it's one of those, like, it is something that is the future. It's the next 10, 20, 30 years. There's going to be more electric vehicles. There's going to be less, what do they call, legacy vehicles. And so, yeah, I mean, I don't know anything about any of this.
Is that the branding for cars and trucks that use gas, a legacy vehicle?
Legacy, yeah. And it's always used in a derogatory,
sounds like
PS. Like, electric vehicles are the future, legacy vehicles, poo-poo. So
yeah.
Listen, that was a nice little break on Tesla. It would have been nice to maybe give us one more day, but that was a heck of the breaks on Tesla, man. You got to love them. Those things that are hot, but it does make it tough. I guess I'll have to scratch this one off of my list for today.
It would have been so beautiful with another doji getting set up for that little shelf breakout, but it took off here today. Obviously, very interesting. One more company in the news here from me, Matt, that I want to talk about. Sony, actually, the game maker and whatnot. They make a lot of different products. They took a $250 million stake in Fortnite. Now, I've never played Fortnite, Frank. I know you're a gamer. Have you ever played Fortnite?
I've never played. Yeah, I'm not a shooter.
Oh, I did not know this.
Yeah,
really?
Huge move here from Sony here today.
What was
and
the
obviously,
stake they took?
250 million. So it's a minority stake, but I think Fortnite, what do they make? Like $4 or $5 billion a year or some crazy number like that?
It's a big number.
I don't think it's that high.
Is it
big,
not that
but
big?
I don't know what it is. Yeah,
but
a couple billion.
It's Fortnite's still very impressive for the gaming community. I mean, Fortnite was one of those games that really took a hold of that new micro dosing financial transactions, where they basically it really did revolutionize the industry to a certain extent, where instead of going up front and paying $60, $70, $80, $90 for a game, you get a free digital download. And then what Fortnite realized over time is those gamers like my son who did play Fortnite, man, I can't tell you how many times my son would come down like, yeah, he's talking to his buddy on the phone. He's like, yeah, I got this new skin for my gun. And I'm like, you don't own a gun, dude. What are you talking about? Right. But yeah, and it's only going to cost me like $5 or, all this. And what Fortnite realizes is that they can actually make more money over time going in that cheaper, dosing financial transactions than they can the upfront. And you've seen Call of Duty do it. You've seen other games do it in response to that, because again, consumers, especially in a very, very nasty economic environment that we're going through, consumers really do struggle making that financial decision to get a brand new game for $60, $70, $80 when they can just play the old game. But now that they can do a digital download, those same consumers who won't make that justification to buy that expense, they're like, oh, it's just $2 here and it's just $3 here and it's just $5 there. You know, it's why, I mean, people are shocked, but it's when they realize Candy Crush is the most profitable game in America, they're like, how in the world is Candy Crush the most popular game in America? And it's like, because you don't realize how many times you spend $1, $2, $5 on these types of transactions. The same way when I ask one of my new students to do a line item monthly balance about what their expenses are, they always lowball it because they don't realize how many times they go to the gas station. They don't realize how many times they go to Starbucks. They don't realize how much money these micro transactions actually add up to. It's really, I mean, just do it in your own life, guys. Go back and track 1 month of transactions that are less than $5. Just track it, add it up, and I promise you, you will be disgusted with how much money you are spending in discretionary spending on these really small financial purchases. It adds up to a lot of money. And Fortnite is one of those that really kind of started that in the gaming.
Hey, will you pull that out to a weekly chart map? That's breakout potential setup.
Well, look at the trend it had there in 19. I mean, it can trend for sure.
Frankie, you're breakout king. How would you look to play this breakout?
You want to be
potential breakout.
Well, as of right now, we're on the weekly, correct?
Yes.
So right now, this is going to be weekly confirmation. So theoretically, you could already be into it, but any upward movement next week. Now, can we go back to a daily chart, Maddie? Because now we're going to, because I mean, we could take the easy answer and go use this weekly bar, right? Above it to get in, below it for the stop loss. I think that would be fair, but that would also be fairly costly and probably more of a position than a trade itself. I think at this point in time, your best bet is we don't break above that on Monday morning, because I would call that a potential entry. If we break today's high on Monday, I'd fault nobody for taking that trade. I think your best scenario, though, is we fail to break that high on Monday, and then any day thereafter, assuming the candle isn't like a huge red candle on Monday, in which case that would kind of nullify everything. But say we have a candle that's similarly sized, right? On Monday, if we push through on Tuesday, we can now use that low of that hypothetical Monday candle as that stop. So we should be able to get a pretty cheap risk if we can get that candlestick development with the same momentum that we would actually get really whenever it was to break that high. Does that make sense? Makes sense in my head. So.
Yeah, it makes sense to me. I mean, consolidation, the longer it's up there, would be a good thing, and it's a beautiful move here today. I think it's got to be a watch list candidate here, Frank. You don't chase this.
And momentum, things like this, Tim, I disagree with that. I mean, I'm never going to fault somebody for not wanting to chase it, but when you have a ton of momentum, I mean, you can want your consolidation, right? And there's nothing wrong with wanting that, and there's nothing wrong with not taking the trade if you don't get it, but there's also nothing wrong with playing into that momentum either, right? Mm-hmm. So it doesn't have to be a long, even a week-long consolidation from a momentum perspective. I mean, as Coach Slavik would say, we could play this bar by bar, right? Mm-hmm. But by giving it that one extra hypothetical day, our risk changes, potentially dramatically. Our position size, our reward goes up, right? If we're taking on less risk. So that's the development that I'd want to see there.
Mm-hmm. Are any of you guys PlayStation guys?
Not really.
They're coming out with a new one later in the year, really? Right?
Yes.
Yeah, because Sony PlayStation, right? So this is a video game play that we haven't talked about. Sony does a lot of stuff, video games, much like Microsoft with Xbox. It's not all of their revenue, but listen, that's a breakout on a company that's not terribly overvalued. About a 16.4 PE ratio. Nice setup here would be worth playing. Nice setup here would be playing. It's running a little hot today to give you a beautiful setup, but there's something interesting there.
By the way, in video gaming, it's kind of like a take your pick. Activision hitting a new high here today. Take-Two hitting a new high. EA hitting a new high. They're all very, very strong right now. Activision to tackle 25 stock as well. So there is some of that. I mean, the gaming industry here has been hot. It's been bullish. It's been one of the great performers here for the last couple of months, guys.
Yeah,
No,
love,
I mean,
love
yeah.
those stocks. I love Activision. I've got a long storied history of fighting with EA. I use Activision as my gaming stock to trade and to play games on for the most
So
part.
Matt, you're a PlayStation guy?
Oh, absolutely. I'm a PlayStation guy.
Yeah.
I gotta play zombies for my son to like. That's the only way. You were talking about Fortnite. My only experience in Fortnite, I got in the parachute one time. I landed, somebody sniped me, and I rage quit, and that was the last time. And then I was mad, and I was complaining to my son, and it was my son who sniped me. So I was done. Like I was out at that point.
Tanyan saw you.
Good man, Tan Man.
Of course, Tan sniped me. He wouldn't be my son if he didn't take advantage of that opportunity to take his dad down a peg or two.
Sure. Let's move into Frankie's charts here for a bit. Last kind of section of our day here. Frank, one thing I know that our audience out there looks forward to every week is Friday Frank Day, when you come in here and you start talking a little bit about the charting and the picks and the candidates that you've been watching. By the way, if you are on Twitter, Frank runs the Tackle Trading Twitter account, and on a daily basis, he puts out really good charts, a lot of great information. It's definitely worth a follow, Frank. You do a really good job with that Twitter.
Thanks.
By the way.
Come join us on Twitter. It's a great place. It's impossible, when you find a chart to call everybody up and say, hey, take a look at this real quick, right? But you're a trader. I mean, I'm a trader. If I see a good looking chart, I want to show it to somebody. But the only somebody with me is my dog, and he really doesn't care about charts. And so being able to snap a picture that I find, or one of the other coaches finds, or one of our teammates finds, I'm always happy to throw that up there. I think it's a great, I'm not a social media guy, but I really do like Twitter because it's nice to be able to share those type of things, get them from other members of the team as well. So come join us at Tackle Trading. Certainly a lot of fun over there.
Mm-hmm. What do you got on your list here today, Frankie?
All right. Well, I think the first one is probably, and definitely want to make sure I look at this one, and that's Nuance, NUAN. They've consolidated really nicely over the course of the last couple of weeks. A very clear top, right around $26. As of right now, we've put in consecutive higher lows as well. Our low this week was higher than our low from that retracement off of the.
You might as well just put Nuance right through the scouting report.
Yeah, that thing's beautiful.
Yeah, that's set up very, very nicely, and probably
good find, Frank.
With the earnings, because now we're in that time, right, where you have to look at the earnings and you find something, you say that looks good, but it's got earnings in 13 days. I have to disqualify it, right? So this is always my least favorite. The next 2 weeks are my least favorite 2 weeks when it comes to building watch lists, because half the things I find, if not more, I immediately have to disqualify because of earnings. But we'll get through them for sure. Another little breakout that I'm keeping an eye on is Tandem Diabetes, TNDM. They've been a little odd, these last couple of days, but we kind of will run up, we'll kind of dip back down, but we are putting together a little bit of an ugly, albeit a high base on Tandem. Have been showing a tremendous amount of strength as of late too off of that.
Yeah, Frankie, it's ugly when you look at kind of the wicks and the candles relationship over the course. I mean, when you're looking at Nuon here, just to, take a little bit more in-depth analysis here, that is a extremely clean breakout at 26. I liked it last week. I actually really like it even much better this week. When you're looking at
Tandem will look better when you look at it on an hourly chart.
Well, and that's what I was going to point out is this does not look clean at all, right? And just my instinct when you were going through it, I dropped it down into a 30-minute chart. Look at that trigger at 106. I mean, so the wick versus the candle relationship does not, you don't get a clean trigger, but when you break this down on the intraday, that 106 level really does stand out.
Yeah, it really does. Yeah, it's kind of
what they say, when it breaks 106, it goes to 107.
It does. It does. You know, it's funny. I took a picture for the talk about tackle trading Twitter. I still have the big cup and handle that I threw up on the tackle trading Twitter on my charts. I'm looking at mine right now, so I can actually see. It's just kind of funny that that's where it looks, where it's at right now. So there's a couple breakouts for you. You've got a few more. You got CAG, but they've kind of followed through a little bit more. CAG, they'd been spending, you know, the last week and a half consolidating after breaking a pretty respectable level of resistance, in my opinion.
On positive earnings too.
Yeah, they had some decent earnings. I was hoping they weren't going to, because I'd argue that they've, you know, hit the entry point here today, but I still think there's probably some risk to reward that we can work with within them.
Couldn't you map out something above 36.5 with the stop underneath the breakout channel at 36 here though?
I think you probably could, but I think, you know, for me, I'm picky. I think I'd rather work with Patterson Companies, PDCO, very similar type of scenario. And I'm probably going to feel a little bit more comfortable with the risk to reward and the wiggle room that I'm able to get the trade. So it's not that I wouldn't, I would sign up on CAG. I think you could do that, but I'm comparing CAG to everything else, right? And you can't trade them all, as much as I wish I could figure out a way to do so. You know,
I don't mind. I don't mind. I know the wick's a little concerned here, Frankie, but you're going to close above 36 most likely. You're only 50 cents above the breakout channel, which is really close to within 1/2 ATR above that breakout channel.
Yeah, and you know, you brought up when you were talking about the sectors, Matt, that you know, if the staples were to break out, you could be interested in that. And so if we're looking for a staples play, you know, certainly Conger brands would certainly fit into that fold. So, you know, I'd fault nobody for that break. I would definitely call it a break. I wish it would have given me one more day, because you guys know me, I'm not a huge Friday trader type of a guy. But to each their own. Like I said, Patterson's, I like Patterson's more. PDCO, similar type of breakout, you know, development. I think I like that a little bit more. I think I like healthcare a little bit more personally from a sector perspective. So you're seeing some breaks out there that are going to be, you know, fairly legitimate. On the retracement side, didn't find a ton that I love, but you do have INFO, IHS Market, that's had kind of a, you know, little mellow type of a pullback over the course of the past week. I think in this market, the best way to roll is to play into strength and play into breaks. So that's been my general philosophy. Speaking of breaks, I would be remiss to not bring up Shop. You know, Shop had a pretty good sell off early in the week, held the 9 EMA, closing, creeping back towards those tops. We all know Shop can move with the best of them when they want to, and they've developed, potentially are developing into another break. Although kind of like Nuance, Maddie, if we're having this conversation on Shop next week, I think we'll both probably like it a little bit more, right? But yeah, if it wants to break, it's not going to wait for Matt and I. If it wants
not on Shopify.
If it wants to break, not so much. On the bearish side, I mean, you are going to find breakdown candidates. We saw the energy sector break down yesterday, a little bit of a bounce back here today. Pretty much, take your shot in energy. Most of those charts look the same. Probably look at XLE would be my opinion if you're looking to play the energy breakdown. Some of the restaurants like Darden, DRI, hanging at support, broke the 50, is going to close below the 50, below the 20, below the 9, it's chilling right on support, hasn't broke yet, maybe never will break, but a break below that support level, and there's going to be plenty of things that look like DRI if my scans are any thing to go off of, but there are going to be some breaks. I actually like 5 as a breakdown, FIVE. They, again, much like our friends over at DRI, they've broken below the 50. They're below all of their moving averages and have put together a nice little floor this week. Nice little intraday floor. I believe a break below that support level could make for a really interesting selling signal as well.
Mm-hmm. It is a stock picker's market in many of those regards, Frank, because there are good setups on the top side and the downside, just like you're kind of pointing out several of these. I love it. I love it. And by the way, if you do want to get daily charts from Coach Frank at Tackle Trading on Twitter, is a great follow. And a lot of these candidates, Frank, we're obviously going to be talking about in our scouting report meeting here in just a few minutes when we meet internally with our coaches and kind of go through and produce those weekend reports. Let's get final thoughts from everybody.
We got to do one more because Adam brought it up. I forgot
Sure.
about him, Adam. I put him on the Twitter earlier, so you'd think I'd remember, but CVET was another one Adam brought up. So one more, and then I'll shut up and I'll let you guys have your final thoughts. And while I let you bring up CVET, yeah, come join us at Tackle Trading. Happy to have you over there. You can always find me at Frank Martin 23 as well. If you're looking for me, that's a pretty easy place to find me.
Mm-hmm. Mm-hmm. Love it. Matt, Frank's a good follow on Twitter, you know, and I like the way he runs Twitter. Yeah. Yeah. Just content, just information, a lot of value, what the community's doing, good charts, good information. Keep up the good work on that, Frankie. You know, kind of an interesting light day in the news and all those kind of things. I mean, the big volatility is going to be over the next couple of weeks. We're going to be breaking it down on a day-by-day basis. Let's get Mark. Mark, what are your final thoughts here for the team out there?
Same that they've been for a long time right now. Listen, this market's insane, right? We're probably in a bubble, but don't try to guess when the bubble is going to end. A lot of beautiful setups that are going to occur coming into this week. You still have you think about the resolve today. The market was down hundreds and hundreds of points, foreign market selling off. This market didn't care. A lot of concerns from an investing point of view, but you still got to trade. You got to have those bulls prove they can't win anymore.
Yep.
Because you just have to do it. You have to suspend your rational thinking in trading if you want to maximize your trading account.
Market doesn't care what you think.
Trust your eyes. Market doesn't care what you think. And so that doesn't mean you go crazy. That doesn't mean you go buy a lot of out of the money options. That's just foolish.
Right.
But find those quality setups, trade a couple of them every week, manage them accordingly, rinse and repeat that process until the market shows you that it isn't fervently bullish anymore.
Mm-hmm. Mm-hmm. Maddie, final thoughts from you, sir?
Yeah, very quickly, just a couple downgrades here. Wells Fargo got a double upgrade here today in front of earnings. Why? I don't know.
That seems like a good bet.
It seems really, really weird on the double whammy upgrade.
I'll take the other side.
I'll take the other side too. If I was the analyst, I'd probably wait to see the cheat sheet of earnings next week before I did an upgrade. But that's like taking a test without knowing the questions, right? I mean, just come on, let's wait for the earnings report here. But Wells Fargo did get a double upgrade. Amazon, try to keep up with the price on Amazon banks, because this is impressive. Amazon got a Citibank price upgrade from 2,700 all the way to 3,550, and even that seems light in this current momentum on Amazon. We talked about Netflix's upgrade earlier today. They did get a Goldman Sachs price upgrade, highest on the street up there at 670. Their current price target was 540. So at least a legitimate upgrade out of Citi with Amazon and Goldman with Netflix. I can't stand the upgrades from analysts that just, they were underneath the price and they upgrade to match the current price.
I was going to say, at least Goldman, at least they
give them credit.
I'll give them credit for that, for sure. Yeah, because usually we're upping it to $500 now.
Yeah, it's like 540, and then like people 3 months from now is like, yeah, we had it at 540 and it went to 540. Yeah, but you did it the day after it went to 540. We were here. Right. So at least you got to give Citibank some credit for, sticking their neck out a little bit with the Amazon upgrade, and Goldman with the Netflix upgrade. And then Rosenblatt, we were looking at NVIDIA just yesterday, and Rosenblatt gave them a price point upgrade. And literally off the top of my head, I'm like, yeah, that makes a lot of sense. $500 price point. They upgraded from $400. So a nice legitimate upgrade there, in my opinion, on NVIDIA. Citibank comes out on Beyond Meat. They initiated rankings on Beyond Meat, and they said, we don't like what we're seeing here in Beyond Meat. And they actually initiated that as a initiating sell. So they came in pretty hot and heavy with the sell rating on Beyond Meat. And then the last thing I have is we're preparing for the scanner report meeting later on today and get ready for those scanner reports tomorrow, ladies and gentlemen, is the PPI report came out today, a fairly important inflationary report, producers price index. And the numbers were actually really negative, in my opinion, from an economic perspective. Core PPI report came in at negative 0.3%, standard PPI at negative 0.2%. Economists had those projections at 0.1 and 0.4% respectively. And if you're just looking at this number, you're like, well, Matt, what is that number? This number simply means two things. What it means is we're not seeing a V-shaped economic recovery. Okay. So in your little circles, your family and friends over the weekend, Sunday brunch, and they're talking about how the V-shaped recovery is taking hold because they had looked to Larry Kudlow, and Kudlow told them everything's rosy out there. Baghdad Bob, everything's rosy out there. All you got to say is, well, have you guys looked at the core PPI report? It came in at a negative 3%, and year over year, it grew less than 1%. We're not even seeing that type of growth in the marketplace. So the data doesn't support that. The second thing it means is this. If anybody's expecting the Fed to remove their dovish stance, good luck. They have all the economic data they need to continue to maintain historic dovish monetary policy. The PPI report really kind of leads to a deflationary stagnation environment economically more than a growing growth-based inflationary environment. This is a fairly damning negative report here today, in my opinion.
Love it. Thanks for all the updates on all those things, by the way. One last thought I have from my side here. I'm trying to figure out which of these gaming stocks I really now love the most. I know Activision was blowing out. We didn't take a look at C Limited. Have you guys traded this one much? SE?
SE?
Yeah, I've not traded it a lot, but that's a gaming stock out of Singapore, Matt. They actually make
that's an Apple type trend right there.
The product is Garena, which is what they own, and they make the League of Legends gaming, Frank. They do all that online live streaming stuff, like the esports around gaming. What an incredible chart.
Yeah, it is. That one's been in the scattering reports a few times.
Yeah, it's been in there multiple times.
It's been in there a couple times, and the pullback and the break itself. A little more development. Think about another pullback on it. Absolutely pretty. Hey, since you got your toss back up, I got to throw this one to Mark. SERV. Mark likes a good pinch. Yeah, and if you turn that to a weekly for me real quick, Maddie, then I'll leave you alone. Not only are you trying to come out of that pinch there, Mark, but you're also trying to close above that 200 weekly for the first time.
Oh, that's not Frank knows I like that one. What the heck does Serve Master Global?
I don't know. I've been watching that pinch develop for 3 weeks, so I figured I'd figure out more about it.
Pinchy poo
when that pinch comes through.
What happens?
I don't know.
Pinchy poo is not happening. Nobody ever said
pinchy poo.
Hey,
listen. Two thoughts.
I'm sorry.
I don't know what they do.
Cody, you got to cut that and get that on Twitter. So Mark never does that again. So we need to be very strong on this, ladies and gentlemen, so we never hear that again.
Oh, Matt, you never listen. I'm gonna bring. There's gonna be a weekly pinchy poo.
There is not a pinchy poo. It's not going on the tackle trading bingo card. It's not doing it. Pinchy poo's out.
Pinchy poo, c'est la vie. Hey, two things I know.
Have him say "c'est la vie" 14 times in one sentence, and he's actually done it before. Then I would like to hear pinchy poo again.
Yeah, well, now that I know your kryptonite, I listen.
Pinchy poo is everybody's kryptonite.
Dude, I like poking the bear. So, well, I don't know what
you were trying to poke the bear. That was natural to you.
I know, but the future pinchy poos will be poking the bear.
Yeah.
Listen, I don't know. Two things. When I
should not have came in this hot. I should have let it go.
You should have. Listen, don't let Superman let Lex Luthor know what his kryptonite is.
Hey, listen, Mark, it's pest control and commercial services.
Hey,
so they got Terminex, like Terminex, and Service Master. So they're kind of, that's who they are.
So you got some pests. I know. I
would have loved, Frank, if you were to say they clean up dog poo.
Listen, I know algos will like that an upward movement. Like the algos will like that. Nobody trades it. What's the volume? Actually, that's actually not
It's
terrible.
not terrible.
Volume.
Yeah, it's not terrible.
That's actually not terrible volume.
Mm-hmm.
That algos love that chart.
1.5 million a day.
Yeah,
that's not terrible
you can
volume.
definitely trade the shares on it if maybe not the options, but the shares.
Last thought out of me for pro members, I'm going to be talking some commodities in 15 minutes. You can go to the calendar at Tackle Trading to get in, talk some commodities, and then whatever we'll pinchy poo it up at the end in the market bell. Go over whatever you want to go over. So I'm going to do that Mind of a Trader here in about 15 minutes for pro members. Can access it from the calendar.
Matt, they probably do pick up dog poo, by the way. They're a term that
they
Terminix
pinchy
company.
poo.
Yeah, they actually operate residential, commercial, termite, and pest control. You've heard of the company Terminix, which will come out and do pest control services. That's who this is. That's who this is. Interesting.
I can't get pinchy poo out of my head. Nothing you guys have registered with me ever since Mark said pinchy poo. I'm just like, how do I stop this?
Now you're going to encourage him. He'll be doing a live read, and Max Loss will drop pinchy poo somehow in there.
Listen, this is only way this works is if Mark does say pinchy poo in Max Loss character. I could understand that one.
Hey, listen, even if you don't like the pinchy poo, you've got pretty flat horizontal level of resistance to boot.
It's got to stop. Even if you don't like to pinchy, but like we got to stop.
That ship has sailed. It's over. It's
Stop
in the
loss.
lexicon. Ilka, if you're out there right now, we'll need an updated bingo card. It's just, I'm sorry. I'll take some responsibility
Ilka,
for that.
I will bribe Ilka to not do this.
Oh, what a fun week of shows here, guys. If you're out there and you're watching our show, we do appreciate you as Team Tackle. As always, if you need something, you let us know to team at tackletrading.com. Buzz us an email. If you've not done it yet and you're new to our channel, subscribe, click the bell. We passed that 9.5K mark this week. Let's keep bringing in more people. We love you guys out there.
Have a fun surprise at
10K.
We'll have a fun surprise at 10K.
We definitely will. We're going to have something planned for it. Guys, we're out for the weekend. We're going to go get ready for our scouting report meeting. We will see everybody back here on our channel Monday, same time, same station. And everybody, we'll see you then. Have a great, safe weekend.